May profits be upon you. I hope your weekend was awesome, but we have some business to take care of, don't we? All right, now look, we're going to go over the indices real quick. And I want to mention up front that there are similar price action, similar setups. They're all three of the ones I'm going to go over, which will be the S&P, the NASDAQ, and then the Dow Jones. All right. So I'm going to run through them real quick. Okay. And just try and be patient with me. Okay. So what do we have so far? On the dailies, starting at the dailies, you can see price gave us this inverted head and shoulders. Okay. I love to see those things because they're easy to trade. All right. Once the head goes down, once this last impulse goes down, I'll look for price to come back and retest the order block in that leg of structure. And that's exactly what it did, breaking these short-term highs, coming back and retesting the order block here. All right, boom, and then it takes off. All right, so the one things I like to do is always make sure I mark that head, the order block in the head of the head and shoulders, and where that right shoulder will come back and test, and then I will mark the order block, or the order block for the right shoulder as it goes up, because when price does come back after breaking structure here, that's where I want to see price return to. That's why you see I have the order blocks here posted, because this is a return to impulse move. All right, what do I mean by that? All right, I will show you if I can just find this thing. This is a break of structure here. This is another break of structure. These pullbacks, 2 candles at least, one trading outside of the trading range of the prior one. That's a valid pullback for me. Then you have short-term highs. You break 2 of those short-term highs, and you can expect that same return to impulse. Where is the order block? That impulse price past those breaks of those highs. All right, we also have one here. All right, major break here, major break of structure. So I'm looking for a return to impulse. Now we have to find which order block will it come back and test as far as a break of structure. A return to impulse. Have it coming back all the way down here is like a 6% correction. That's a big ask. If price makes it down here, I'll be waiting for it. All right, but I'll mark where I think price may come first and may potentially reverse. All right, now this one here is above the break of structure, but it may we may get a reaction here, because you see how price left this area. All right, this is a valid order block. All right, and price left the area pretty well, so we might get a good reaction here. Maybe it might not break that high, but it will give a significant amount of pippage, all right, to maybe trade. All right, but what you want is to make sure you measure the impulse so that you can get a fix on the possible correction with your Fibonacci. All right, now I don't mess around with anything above 50%, because this is premium prices. Where you want is below that 50% line down here, where institutions like to take their longs in discount pricing. They get better prices down here. The 50% area is for retailers, for dumb money, for people who say, hey, price will probably return to this 38 Fibonacci retracement, this magic level here, and whatever, go up. All right. No, you wait for a proper pullback, and you wait for a discount price to get in. That's it. That's all it is. If it doesn't come down here, no harm, no foul. That's it. All right. But I want a better price, and I will be patient enough to wait for it. Now, this is a 618 Fibonacci retracement level. This also aligns with structure to the left. This also has an order block on the 12-hour. Let me see if I can get to it. All right. Those are the confluences I look for. You see that? It's a pretty strong order block, a pretty sturdy looking order block on the Dow Jones. So if price makes its way back here and then pulls up, hey man, it starts to look like it did not too long ago over here when price had a lovely impulse up, right? Breaking structure, just like down there. Short-term highs being broken, and a structural break here, another structural break there. Price zooms past it, and then it corrects. All right. After every impulse comes a correction. And the way you measure that correction is you put your Fibonacci's on here and you look for price to come past the 50% area. And that's what it did. It came to the 618, came back and retested and took off. All right. Price is always going to go up. It's all a matter of when it comes to the Dow Jones and the indices, always up. So I'm looking for the same action over here. Does that make sense? I hope it does. All right. Same situation with the NASDAQ. All right. If we go to the daily, we can see price had these breaks of structure. One break of structure, boom. Look at the pullbacks. Down, lower low, lower high, lower low, lower. Look at this. Was this a lower high? No, because it didn't make a lower low. It made a higher low. All right. And we marked it. Boom, boom, boom. Inverted head and shoulders. Break of structure, break of structure. We haven't had it. We didn't get a pullback. Break of structure. We didn't get a pullback. Break of structure. We didn't get a pullback. The pullback is overdue, period. So I'm waiting for the price to come back past this 50% area. I'm waiting for price to come back down here. Maybe do give me the bullish price action that I'm looking for, and then goes up. If it comes all the way down here, I will be more than happy to take, because this is where I live. This is where I live at the 786, close to the 1. As long as price doesn't break this low, we are still bullish. We are still maintaining bullish momentum. This is just a higher low to make a higher high. That's all it is. All right. Bear that in mind. This is all about structure. Okay. And we got to find out what is the intent of price. All right. On these particular time frames. On the daily, it made a higher high. We are looking for it to make the higher low. Now we have to monitor these POIs. We're going to look for price to enter into our spaces, these POIs, and look for bullish price action. And we're going to look for a reversal pattern like so. Okay. Just like we found here. That's a reverse. That's the reversal we're looking for on every time frame. I'm going to go to the lower time frame and look for price to hit our POIs, and we'll just move on from there. That is NASDAQ. Okay. Let's go to the S&P 500. Same situation. What do we have? Lower, lower low, lower low, higher low. Break a structure, break. Look at that pullback. All right. Break a structure, break a structure, break a structure. We haven't had a pullback yet. We're overdue. That's it. We're waiting for price to come past that 50% mark. Okay. Matter of fact, it's easier, if I can do it, it's easier to put your Fibonacci's on just a 50% above and 50% below. This is for dumb money. This is for smart money. All right. 50% and below is where you get your discount prices for your loans. Period. End of story. You always do that after a break of structure. You measure this leg to get what the correction might be. Okay. We got a lovely reversal, and we're looking for price to give us that correction of this impulse, correction, and then we'll be taking along for the next impulse. we're waiting for price to enter these AOs. I have this one here because even though it's above the breakup structure, we might get a good impulse up, and then back down, breaking these lows. This is going to I'm just looking for a reaction, not a reversal, a reaction. All right. And because this can be a very profitable move on a lower time frame. Okay. But we're waiting for the bigger and better below 50% discount long. If it comes down here, great. I'll be waiting for it right here, looking for bullish price action, looking for that reversal on the lower time frames. If it comes down here, even better, even better. It may hit us here. It may hit us here because I should explain that. The reason why I have this whole move here, it's the down move before the up move, and price could come down here and just tap, and just tap where the beginning of their down move starts, because these are orders. Price, what market makers did was take a sell to buy. All right, and now once they're all in profit in this buy move, they are in drawdown of the sell move, and they have to come back. That's why we call it a return to impulse. That's why this is why they come back, so they can mitigate this order block and get out of those sells, either at break even or close to it. All right, and then continue the bullish momentum. I hope you got that. All right, I hope you understand that kind of institutional thinking. That's the theory anyway. All right, so I will see you in the next video. Look out for these AOs, and we'll see how it runs next week. All right, this is very much dependent on the Dixie. I'm thinking it's going to open. I'm thinking that it may open weak to test this base candle of this order block here. If we look on the 4 hour, I'm looking for price has already broken to the top here for a breakup structure, and I'm looking for a return to impulse and then a continuation. All right, because I'm bullish overall on the Dixie, but while it's pulling down, the indices are going to be going up, of course, right? And once it turns around, we'll see. You know, we'll measure it off. All right, I'm trying to keep things in balance and properly correlated between the indices and the Dixie. So, you know, we're going to keep an eye on things. All right, the Fed is talking about tapering, you know, starting to taper and all this good stuff, and we gotta keep an eye on what's happening with the economy. But I'll see you in the next video, and enjoy more free content by clicking on one of the two breakdowns of the Forex analysis on your screen right now.